Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in company filings and reveal it all with a smirk. Today we're diving into an interesting amendment from Sekisui House US Incorporated, and let me tell you, it involves a pretty significant acquisition. Before we dive in, if you value getting clear, no nonsense insights from these corporate documents, make sure you are subscribed. And hey, we've built a fantastic community on Discord to keep the conversation going. You can find the link in the description below. Alright, so what is the big deal here? Sekisui House Incorporated, which we'll call the company, filed this amendment to an earlier report. They're essentially updating a previous filing that announced they bought another company called Woodside Homes Company, LLC. The original report in December 2025 talked about this acquisition, but they weren't ready to share all the financial details yet. Think of this as them saying, okay, we said we bought them. Now here are the numbers. This filing is the update part. The company had already told the folks at the Securities and Exchange Commission, or CC, that they acquired Woodside. But they got permission to swap out some super technical financial statements for combined ones that showed both companies together. What this amendment is really about is filing those combined financial statements that they promised. They're providing the audited numbers for how the combined companies did for the entire year of 2024, and then the unaudited numbers for the first 9 months of 2025. Now, here is a little kicker. The company mentions they're filing this report voluntarily. They also say they don't really have to file reports with the SEC anymore because they don't have any of their stock or securities publicly traded in a way that requires it. This means they're choosing to be transparent here, which is interesting. It is not a requirement. They could technically disappear from the SEC's radar if they wanted to. So let's get to the juicy part, the financials. This is where we see the real impact of the Woodside acquisition. First up, we have the audited combined consolidated financial statement for the whole year of 2024. This is a big deal because remember, Woodside was only part of the company starting from the 19th of April, 2024. So this statement shows how Sekisui House Incorporated and Woodside performed together for a significant portion of that year. What we're looking for here is how well they integrated. Did the acquisition immediately boost profits? Or was there a drag? Then they provide the unaudited financials for the first 9 months of 2025. Unaudited means these are preliminary numbers, not yet given a stamp of approval by external auditors, but they still give us a very good snapshot of the ongoing performance. This will show us if the combined entity is on track for the full year and if the growth trends identified in the 2024 numbers are continuing or changing. Looking at this, the most critical numbers are going to be revenue and profitability of the combined entity. We want to see how much revenue the acquisition added, and more importantly, if that added revenue is translating into profit, are costs going up disproportionately, or is the synergy from combining the businesses actually making them more efficient and profitable? For example, if revenue from the combined entity jumped by 30% but net income only increased by 5%, that tells us there are significant integration costs or perhaps issues in maintaining profit margins after the purchase. Warren Buffett always says it is better to buy a wonderful company at a fair price than a fair company at a wonderful price. We want to see if Sekisui House Incorporated got a wonderful company and is now milking it for all it is worth, or if they perhaps overpaid and are now struggling to make it profitable in their hands. Right now, without the actual number tables laid out in front of us, we can't pick out specific figures, but the key takeaway is that this filing is all about revealing the financial performance of Sekisui House US Incorporated after it swallowed up Woodside Homes Company, LLC. It is the true test of whether this was a smart strategic move that is paying off or if it has been a costly integration. So, what is my take on this? This amendment shows a company being thorough and transparent even when not strictly required. That is a good sign. It suggests they want to present a clear financial picture to investors, partners, or whoever might be looking. The real story, though, lies within those financial statements they've now included. Did the acquisition of Woodside Homes Company, LLC, create a stronger, more profitable combined entity, or are there hidden integration costs and challenges? The strength of Sekisui House Incorporated's direction hinges on whether these combined financials show solid growth and profitability. A potential opportunity could be in realizing cost savings through shared resources or expanded market reach. Conversely, a significant risk would be if the acquired company's performance falters or if integration proves more painful and expensive than anticipated, leading to lower overall profits. Ultimately, this filing is less about what it says in the text and more about the numbers it reveals. It is the report card for their big acquisition. Alright, that is our breakdown of this Sekisui House Incorporated filing. What is your take on mergers and acquisitions? Do you think Sekisui Houses Incorporated made a smart move with Woodside? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.